Hello, this video is brought to you by Starz Mortgage Alliance. We are a part of Enrich Mortgage Group, one of the largest brokerages in the country. The government announced they will dedicate $1.25 billion over the next 3 years through the introduction of the CMHC Shared Equity Mortgage. And in this video, we will try and understand what this program is all about and who are eligible to apply for it. Effective September 2nd, 2019, the Government of Canada has introduced the new first-time homebuyer incentive to help qualified first-time home buyers. It makes home ownership more affordable by reducing the monthly mortgage payment without increasing the down payment. The new first-time home buyer incentive is considered a shared equity mortgage where the Government of Canada has a shared interest in the borrower's property value. This program is available through the default insurers, Canada Mortgage Housing Corporation, which is also called as CMHC, Genworth, and Canada Guarantee. Borrowers will receive an incentive in the form of an interest-free loan towards their down payment. The home buyer can get up to 5% on the purchase of a resale property or up to 10% on purchase of a new construction home from a builder. Now here is the eligibility criteria for this program. The borrower must be a Canadian citizen, permanent resident, or non-permanent resident who is legally authorized to work in Canada. At least one of the borrowers must be considered a first-time home buyer based on the qualifying criteria. Property must be owner-occupied and located in Canada. Borrowers must contribute the minimum required down payment of 5% from traditional sources. Gifted down payment from immediate family members is acceptable. Application must be submitted on or after September 2nd, 2019, and the possession date must be on or after November 1st, 2019. Only high ratio mortgages, that means only if the total down payment, including the government contribution, is less than 20%. The borrower's annual qualifying household income should not exceed $120,000. The combined mortgage loan amount and the incentive cannot exceed 4 times the total qualifying annual income. Now let's talk about some key facts about the program. Default insurance premiums will be calculated based on the purchase price less the total down payment, including government's contribution. This may help the home buyer save some insurance fee. The first-time home buyers will not qualify for a bigger house or a bigger mortgage due to the government's contribution to the down payment. The loan has no monthly payment. However, repayment amount will be based on fair market value to be determined at the time of repayment. If a home buyer received a 5% incentive, the home buyer will pay 5% of the home's value at repayment. Similarly, if a home buyer receives a 10% incentive, the home buyer will repay 10% of the home's value at repayment. The first-time home buyer will be required to repay the incentive amount after 25 years or when the property is sold, whichever comes first. The home buyer can also repay the incentive in full at any time without a prepayment penalty. Refinancing of the first mortgage will not trigger repayment. It is now time to look at an example. With an annual family income of $100,000 and down payment of $18,000, your maximum purchase price will be $360,000 and you may be eligible for a 10% incentive of $36,000 on a new home. This extra down payment will help you save $182.17 monthly or $2,185.99 annually. Another important thing to look at in this example is the money you get to save on the mortgage insurance premium due to the 10% extra down payment from the government. And now it's time for some frequently asked questions. The most common question is, what if the house value depreciates and you are unable to pay back the mortgage balance and the incentive amount? The program administrator will work with borrowers who are experiencing financial hardship on a case-by-case basis to offer solutions to the repayment requirements. Another good question is, what about money spent on renovations? The program administrator does not need to be notified prior to a homeowner completing renovations on their home. It is, however, recommended that the homeowner considers the cost and benefits of the planned renovations, as the Government of Canada will share in any appreciation of the market value at the time of incentive repayment. A lot of people also ask if there are other costs involved with the new first-time homebuyer incentive. The answer to this question is yes. You may have to pay additional legal fees as your lawyer is closing two mortgages instead of one. Additional legal fees may also incur at the time of paying off the government incentive. Then, to repay your incentive, you may need to have an appraisal done to determine the fair market value of your home. Also, there can be additional fees that may be incurred throughout the life cycle of your incentive, like switching your first mortgage to a new lender or refinancing your first mortgage. To apply for this incentive, you will need to provide a signed copy of the first-time home buyer incentive attestation consent and privacy notice along with the mortgage application and privacy agreement. Feel free to call us at 780-721-2200 to apply for this incentive now. And if you have more questions, please contact First Time Homebuyer Incentive Information Line at 1-877-884-2642 or visit the website. Link is provided in the description below. Thank you for watching this video. We hope to have answered some of your questions.